All right, gang, I'm going to try and make this a very short one. I got to eat some Chipotle, so let's get this daily review on the road, right? If you don't know what this series is about, remember, Chike Investing, what's going on? It's your boy. We are here doing a daily NQ review, right? Daily NQ review. And so, um, and also ES, right? So we're going over every time frame all the way down from the daily to the 1 minute, and we're just going to see what happened on each time frame. And we're also going to go over 22 models that happened throughout the day. You know, the flagship trading model on this particular channel is the ICT 2022 model, right? So if you don't know what the 2022 model is, I've done a really good video on it. I'm going to include it at the end of this video, and I will attach it. But go check that out. But we're briefly just going to go over the daily review on NQ and ES, and we'll go over some examples of what happened with ICT 2022 model today. Let's get it real quick. So this is today. This candle right here is Friday, right? So we're Friday, November 1st, the first of the month. By the way, type in the comments. What's your favorite month of the year? I want to know what that is and why. November. I like it a lot because it is a song by Tyler the Creator, and yeah, it's a really good song. Go check it out. Anyway, daily. Okay, so previous day we had on the daily. In the previous day, we had a very large candle down. And why do we have that? Remember, I told you guys that sometimes when you trade through, this is the daily CB right here. We had this, and let me just make that very clear, right? So this CB right here. This is the daily CB high, daily CB low, consequent encroachment. We've been inside this daily CB for a while, nested inside a weekly CB, right? Weekly CB that we've been in, right? Explains the choppiness that we've had of late. Look, ever since we hit these levels, it's just been choppy. Before that, we're moving consistently. It's been sideways since we got to these levels. So when you start getting into levels like this, you want to be doing short scalps. Like, you can't be holding for long-term trades. Like, a lot of times you won't get really big, expansive candles on the daily. But we did have one yesterday, and the reason why is because there's two reasons I went over yesterday as well. I won't spend too much time on it, but we closed through the constant encroachment of this daily CB. On the next candle, instead of it to expand far away, we came right back down into it. It's basically telling you that this daily CB is still respecting this fair value gap is still being respected as a premium array supporting bearish pricing. Because if this really was not being supported, like once we traded through the consequent encroachment of the daily CBCE and the next candle expanded upwards, I would have been expecting price to go much higher and take out this high right over here and take out this high as well. That would have been a very good case scenario, especially in the election season. You want to end off with the bullish market. No president wants to end off with a bearish market, so they usually end off with a bullish market. But price can also be very choppy around election season, so we're not really getting expansive moves anywhere. But here we came back down through this constant encroachment, and the next candle, it's basically like when you see a candle like this, it's telling you that we're supporting bearish pricing. So the next candle is gonna probably be a very bearish one, right? So this next candle was bearish, and this is something that I've seen a lot on fair value gap. So if you go and back test this, like you can study it. Like look at this other candle over here, right? We came through it, we closed above this consequent encroachment, but then this candle, like we closed right through it. Like the next series of candles could be a bearish one. This next one was a bearish one as well, but we didn't really expand away. So the same thing is happening over here. We came back down, and then we finally exploded lower, taking out the previous week low after taking out the previous week high, which is also a sign of reversal, right? Like we purged liquidity up here, and then now we broke market structure down here. So on the daily, we are now bearish. This is also low-key a 22 model, right? Because look, high, higher high. We break market structure right here, and now there's a fair value gap. That is the 22 model, right? I teach on this channel. What is the 22 model? Just for everybody who doesn't know, 22 model is, let's say you have a series of higher highs right here. Excuse the squiggly lines, and it's really bad, right? So high, low, higher low, higher high. Then we break market structure, right? So this market structure was broken right here, and we have a fair value gap that is left in that place. We can return back to the fair value gap. Sometimes we just stop at the breaker. Sometimes we stop at an inverse fair value gap, so we don't always make it here. But there needs to be a fair value gap present because that shows displacement, and that price is really breaking market structure. And then we continue going lower, right? So that's 22 model. So that's what we have right here, right? We have this high getting taken out by this high. This low breaks market structure, and we have a fair value gap in place. So now I'm officially bearish, especially because we're at a weekly, we're at a weekly level as well. So this could start an MMSM, a market maker sell model to take out this liquidity down here, this liquidity down here, and this fair value gap over here. I'm wondering if the election season can do that. that's coming up next week. And so we have that forming on the daily. Okay. By the way, if you like what you're hearing so far, if you found this very helpful, make sure you press that like button, make sure you press the subscribe button, and get notified so you don't miss one of these daily reviews, because this is going to be very helpful as you're developing your bias over the next couple of weeks. And I'll also teach you like how to look at daily bias. Also, something that's going to be very interesting. Look at this as well. I just noticed, like this is the consequent encroachment of this wick. ICT says that wicks are also fair value gaps, right? So we have this wick, we close to the consequent encroachment through it, and we also close below this weekly level low. Also very bearish price action. We came back up and we didn't close through this wick CE, showcasing that we are quite bearish. I would expect either the next candle to come up and fill this fair value gap a little bit, touch it, and then go lower, or we can just continue going lower from here. Right, so that would be that would be ideally what I would like to see next. Obviously not guaranteed. This candle also is a candle that did not take out the previous day low or previous day high. So this is now what we call a volatility candle. So the next candle should either be an expansive one, right? That's why it's called a volatility candle, because this daily low and this daily high has got to get taken out. Most daily highs and lows get taken out. So the fact that these didn't get taken out, I'm expecting the next candle to be expansive, right? Or we can consolidate for a little bit. That is also in the cards, because I'll give you another example of that over here, right? So this candle right here from last week Friday was an inside day in the next candle. We did not take out the previous day high or low, but the next candle after that we expanded and we took out this day's high, right? So we could see that happening over here. On ES, I'll give you an example where that didn't happen, right? So we had an inside day on this candle versus this daily candle, but the next couple of candles we just consolidated until we finally expanded. Like when we're gonna take out this daily low or daily high, like we're gonna expand. That's something that I observed, and so that's kind of my bias for now in the daily. We're bearish. 4 hour, what happened today? So, 4 hour today, we basically just like consolidated overnight, just respecting some a bullish order block right here, creating a propellant order block at this like very short, deep discount, and then we are encroaching upon the equilibrium of this move from this high to this low, right? We came back to equilibrium of this move, and we're hovering in the discount portion of that particular trading range. I also show you something pretty interesting as well. Like we had a TGIF profile today because this is Friday, right? As ICT teaches, so we had a down close candle, a strong down close candle on the weekly. So I'm expecting, coming back on into Friday, that if we close Thursday off and it was like a very deep candle, on Friday we're gonna come back into at least 20 to 30% of the range, right? That's called TGIF. If you've not heard about that, go search it up on ICT's model. We can do a class on that, and in this particular, workshop. If you guys are interested, feel free to leave a comment below. Also, again, if you like what you're hearing so far, press that like button. Press it now. Thank you very much. And you can subscribe. Press that notification button so you don't miss one of these. But we came back into 20 to 30% of the range, right? So let's just even mark that out, like from here, right? So that we can just see how we interact with these levels. And so I'll just go in there and just like manipulate the coordinates myself. 242.5, and the low there is 22164.5. Okay, I like to make it green just for craps and giggles. All right, so that's the TGIF portion. Oh, where'd that bad boy go? Get the visibility on all time frames. All right. So look at how we touch the consequent encroachment at that level on this candle. Like you can tell that this is a real PD array, right? This 20 to 30% level, right? That is algorithmic in nature. Look how we touch the consequent encroachment of that right there. That just shows that just validates. I'm only saying that because that validates that this is actually a level worth looking at, because we are going. That's like that can be your draw on liquidity like going into this morning. And that's why I was bullish, even though we are higher time frame daily bearish. But we came in and we came into this 4 hour value gap that had the TGIF level that was nested in it. We wicked into it pretty high, and then we closed in the bottom half of this TGIF level, and like around the low of it, and did not even close into this 4 hour value gap right here. So that could tell me that next week we could be seeing lower prices. On the 1 hour, what happened? We overnight looking into London, so Asian, we came out, took out this low right here, spiked higher, formed an order block in London, came back down pretty aggressively on the previous week low, still finding support on top of it, coming back into this wick, right, which acts like a fair value gap. We're tapping the top of this wick multiple times to do that twice. Once in London at 3 a.m., trickled higher with very low volume price action overnight, and then expanded going into the 9:30 open. We came back, had a Judas swing down here, and then went higher, filling that 4-hour fair value gap and coming out to that TGIF level, which was the drawing liquidity for today. And by 11 a.m., we come back and we wick into the TGIF level, not really closing out of it. And then we close below it at 1 p.m. and then find some resistance at it, creating a bearish order block, and kind of just hanging around there for the rest of the afternoon. All right. On the 15-minute, gosh. So I make these levels apparent on every time frame. Not sure why it's doing that. Okay. On 15-minute, what do we have? Right. So Asian session, we create a low right here, filling in this new day opening gap right here. It's new day opening gap. We're hovering around that for a while. We close it all the way through, come back up and break market structure here in Asian, come back and touch this fair value gap right here. Past midnight, and then in London we create another high, but then we invert this 15-minute BISI, come back down and touch that 1 hour wick level, come back higher, and then we trickle on top of this opening range gap from Friday, by the way, right? So we're reacting from a pre-array level. We're in the upper half of this opening range gap from Friday, from last week. The reason why I still have this on my chart is because we didn't completely close it in last week, and so it's still relevant to me, just like how yesterday we did not completely close this opening range gap from Thursday. So this could actually be a draw on liquidity that we can go into next week before we go lower. That's something I could see and then take out all the LRs. But let's continue here. So London, we come back higher, consolidate for a little bit, come back down, touch that 1 hour wick with the opening range gap CE for a little bit, and then break market structure going into 9:30 a.m. open, right? Create a 15-minute fair value gap with a breaker right here. So it's technically a unicorn model. We come back and tap this breaker one more time, and then we swing higher, right? We come back and tap this 15-minute fair value gap, closing the upper half of it, create another high, and then going into 11:30, we start to retrace some of the morning move. And going into lunch, we're coming lower as well. By the way, 11:30 is the lunch macro where you can start to see price coming back down and taking out some of the liquidity from the AM. And then lunch, we kind of consolidate for a little bit. We create a high coming in 115 here. 130, we expand lower, right? 130, you can see a lot of injections coming in because that's technically when the PM session really starts. And then we just consolidate at the bottom half of this TGI level for the rest of the afternoon. 5-minute. Overnight, pretty much similar moves to the 15. We take out these lows here in London, coming lower, come up higher, and then we form a 22 model here in London. And recover because we're in a discount. Like this could be a pretty valid trade if you took this in London. This 22 model right here, low, high, lower, low, breaking market structure, fair value gap. We retrace back into that. We hover there for a very long time until basically AM. Like once we've been here for like at least 5 candles and we don't expand, like, I'm done. Like look at that, 1, 2, 3, 4, 5, 6, 7, 8. Like we come back lower, 9. We're just been here for so many candles. Like this is like when you take out like a time stop. Basically, a time stop is like when you've been in there for too many candles. Like it's very likely that price may not be going in your direction. Like you want like the best 22 models is when you just see expand immediately. If like the next 3 to 4 or 5 candles are not going, like you need to just pull out. Or at least take half the trade off and wait for it to hit your stop loss. Your stop loss could have been below this breaker right here, or below this low right here. Price consolidates for a little bit, comes into 9:30 open, where price has already taken out a lot of the liquidity, right? And we're a discount and we have a bullish bias. So a lot of times if you see price coming in and taking out the liquidity before the 9:30 open, the 9:30 open will pretty much start the move for the morning. Sometimes you could, like this is basically the Judas swing before that 9:30 open. If we did not have the Judas swing, like I would like to see a 9:30 open come back down, take out some of this liquidity, and then go higher. But we already had that jitter swing before 9:30, so price could have kept going down lower, but I'm not surprised if price breaks market structure. That is the time where I know in the opening range that I can take that trade when price is taking out the liquidity below. Prior to 9:30, we didn't have that much movement overnight, so that's why you can see some nice movement in AM, right? Think about accumulation, manipulating, distribution. Like we're accumulating here for a little bit, we manipulate, and then we distribute, right? This is also a valid 22 model here on the 5-minute that we saw. So once you have this low taken out by this low, break of market structure above this high, fair value gap right here, right? Price comes back down, touches the top wick of this breaker, right? Sometimes I told you that you don't need, like it doesn't always come back into the fair value gap, so it comes to the top of this breaker. This will be your entry here at the high. Your low can be, below this inverse fair value gap right here, with this particular fair value gap as well. Plus, you have all these wicks. Price should not really go below, let's say, like below this level right here. I could put my stop right here, below this inverse fair value gap, and like below the consequent encroachment of this wick right here. And then price goes higher. You can aim for a 1 to 3 right there. What would that look like? This is a classic 22 model, guys. I'm showing you guys that this is like the 22 model review. All right, so just keep it below the consequent encroachment of this wick. Aim for a 1 to 3. Right. You can also aim for this opening range gap above here that we don't really get to because we reached this lowest hanging fruit objective, the TGIF, right? And price just doesn't have a willingness to go all the way higher. Right? Election season also can make price just pretty crappy once it's made its first, like once it's hit its first good objective of the day, it can just be crappy. Right? So we go in, we enter. I've taken off half my trade once we reach half here, and then set the rest to break even. And actually, once we broke above this particular down close candle and formed a new high that closed above this high, I would have set my stop loss right here. And once we get to half of the level of where I'm trying to get to, then I would set to break even. And maybe we could even refine our stop loss a little bit so we can actually have a better 1 to 3 trade. It's probably more like what I've taken. Because we have this inverse fair value gap right here. We have like the body of this breaker. We have this SIBI right here. Plus we have these wicks. But this is like a balanced price range right here. So price really shouldn't even come back to this gap. It should act as a breakaway gap. So I think right here would have been a really safe place for stop loss, especially at the high of this opening range gap. That's like 4 P to raise right there. So this is actually fine right here. So once it got to the halfway point, I would have like set to break even from this low. And then I would have taken out the rest of my trade up here, or maybe on this candle, I've taken out like at least 80% of my trade, leave one contract and hit the full TP. Then you see price like comes right back down, right? And then we're just chopping around. We invert this fair value gap going into 10:55 a.m. macro. So if you're an inverse fair value gap trader, you could have taken that and then taken and sold it at the top of this high. But reacting from this particular 5-minute fair value gap right here. But we've already like closed the entire TGIF, like not really looking for any more high probability trades. I would say this is the lowest hanging fruit trade of the day. And then we basically just chop around for the rest of the day, back and forth. Not really any clean price action, not even worth looking at. 1 minute, just take one brief look at that. So coming into 9:30 open, right? We already manipulated. We had all these LRRs right here, taking out all this liquidity right here. Where's now all the liquidity after we've taken out all of this coming into 9:30, right? It's right up here. These relatively equal highs. Very easy hanging fruit to get to when you see price break market structure like this with speed. And then going into 9:39, we create this fair value gap. We take out all this liquidity above here. Because I'm still looking for like higher levels, especially there's higher draws and liquidity above, you could still enter that trade. Plus it look good on the 5-minute. But this is like an opportunity where I wouldn't have done the 1 minute. Like it just looked way cleaner than the 5. Price comes back down into this fair value gap, 947, 946. Breaks market structure, comes back down, does not take out this low. That's why my stop loss is below this low, because once you've closed above this high, like price should not come back down below this low. Just in my own personal study, like this is a pretty good place to trail your stop once you close above this high. We come back down, and even though we have some heat right here, just because like we've reached the TGIF level, we did not take out this low. We went higher, and then we found another fair value gap, right? And this is kind of like another nest. This is another 22 model. If you missed the 5-minute first entry, you could have entered on this one in the 1 minute because you took out this low, with this low right here. Break market structure above this high and above this high. Have a fair value gap. You enter right here. Stop loss can be below this candle, below this inverse fair value gap, and below these two bissies right here. Aim for 1 to 3 as well. You would have gotten that as well if you missed the first one. Once price closed above this high right here with this candle, set your stop right here. And then once you get to halfway point, take half of your trade off, put it to break even, wait for the rest to get to 1 to 3. Then you're done for the day right there. Right, 10:30, we start reversing. We come back down here, we take this low, invert for this fair value gap, But then like you see price action is not that clean because then we come back through this inverse fair value gap again, close down below it, go higher and trickle higher all the way until about 11:30 where we start pulling back, right? And we form a breaker right here after taking out these highs. We have these LRRs below. So maybe this could have been, but you don't have a fair value gap right here. So this is not a valid 22 model. But price comes out, it takes out the first low. From 11:30 macro, price can take out the first low that formed after 10 a.m. So you see that it does that. And it takes out this low as well. But then we just consolidate, pretty much come back lower, and we're just consolidating back and forth in this TGIF, you know, pretty much entry. We do take out the lunch high, I believe. No, we don't. We just leave relatively equal highs right here. I wouldn't have been looking for any shorts because look at these really clean relatively equal highs right here on a choppy day. Not really looking for anything right there. This could have been a pretty good buy right here at 220, at 220 to 240 macro. But then one price started, like, you know, this is a 22 model right here, right? Low, taken out by this low. Nice break of market structure. We invert this fair value gap. Really nice fair value gap right here. Momentum right here. Come back into it. And price just like, but then it starts gyrating a lot. Plus we closed through this Bissy right here. Once he did that, I'd probably pulled out. I'm done for the day and just take like a small, tiny partial loss. I've already made money in the morning. Come back up here. Price barely reaches the half point of that, and then we basically just gyrate for the rest of the day. So that's today's daily log. Great log session. And yeah, let me know if you have any questions. Make sure you like and subscribe to the channel. Peace and love. Good night, guys.